It's 10 times more profitable to manage $1 million account compared to $100,000 account. Yet it's not 10 times the work. What happens when you encourage your advisors to target the HNW or high net worth market? Sometimes advisors have the misconception, and maybe you've seen this in your own work, that high net worth individuals are, celebrities or athletes, or, they're C-level executives, or they've inherited a lot of money. MassMutual did a study, and they looked at the incidence rate of business owners in different wealth cohorts. Now, business ownership in most Western economies is about 2% of all people in that economy are a business owner. So here in Canada, it's about 2%. In the United States, about 2%. That's an employer-based business, the owner plus one employee. When MassMutual looked at those with investable assets of between $100,000 and $500,000, so the kind of mass affluent segment, fully 17% of those were business owners. Said another way, you're 5 times more likely to find a business owner in the wealth cohort, 100 to 500,000, than you would be in the market at large. Go up to $500 to $1 million to invest, the upper end of mass affluent, the number jumps to 27%. You're almost 10 times more likely to find a business owner in the wealth cohort 500 to $1 million to invest than you would be in the market at large. Now, if you go up to the traditional definition of high net worth, those with $1 million to $10 million to invest, turns out more than half of those are business owners. If you then go up into the ultra high net worth segment, 10 to 50, or even 50 to 100, it's basically all dominated by business owners. What's interesting is what I just showed you are investable assets. Effectively, it's the top of the iceberg sitting above the waterline. What's below the waterline is all the assets they have in their company. TD Waterhouse did a study and showed that for a typical business owner, 85% of their wealth is in their privately held business. In other words, it's not showing up in that data. What's interesting, at Value Builder, we did a study recently and discovered that over the next 10 years, 3/4 of all business owners plan to exit their company. You know what the biggest mistake is that most financial advisors make when they approach business owners on their lists? They're uncomfortable talking about business owners and the wealth they've got in their company. They don't know what to talk about when it comes to their business. And so as a result, they talk about the 15% of their wealth that's already above the waterline, the 15% that's already in investable assets. And they ignore, in fact, bury the headline that is the big majority of their wealth, which is in their company. And that comes from a fear among most financial advisors about just not knowing how to start that conversation with a business owner about the wealth they've got locked into their company. And that's what we're going to talk to your advisors about if you give us the opportunity. I want to talk to them about a study I did years ago into the psychographics of the business owner segment. And I think it provides the basis or the raw material that your financial advisors need to have a really fruitful conversation with a business owner about their company, a conversation that they may not be comfortable having today. I know that this research became popular because I had the opportunity to present at Apple headquarters in Cupertino. And in walked a woman named Jo Lawson. And Jo had my book based on the psychographic research that I'm about to show you under her arm. And when she opened it up, it had all the highlights and sticky notes and dog-eared corners of the pages to indicate that she had been reading this and was in fact informing the world's largest company, the most highly capitalized company in the world, using this segmentation schema. And I think if you train your advisors on these psychographic segments, they will be very comfortable having a conversation with the business owner about their company. The psychographics are mountain climbers, freedom fighters, and craftspeople. Mountain climbers motivated by growth and achievement, freedom fighters motivated by independence, and craftspeople motivated by mastery. And if you understand these people at a core level, you will be able to build trust and ultimately start the conversation about the wealth that's sitting inside their company. I hope to have the opportunity to speak to your group